Well, there's still plenty of red above our heads, as you can see. But the good news is that the recovery has been quite promising, at least so far, and it's not getting sold into, as the Nifty graph tells you. And ditto for the mid-cap index as well. Today, the point of bother for the market continues to be the Bank Nifty. That's the index that's not playing ball. And it's down over 0.5% right on the Bank Nifty, with the biggies like HDFC Bank really dragging their feet. So that's the shape of the market right now. Let's move to that promised conversation on fundamentals and how you should be looking at your portfolios. Neeraj Chadawar, Head of Fundamental and Quantitative Research at Axis Securities, is with us now. Neeraj, thank you for joining in. I think the first question that everybody has on their minds is whether the broader market correction is over or whether there's more to go. What's your sense of everything that's transpired, whatever we've seen over the last 10 odd days of March?
Thank you for having me on the show. Yes, you rightly pointed out that we have seen some amount of correction in the broader market. Let me put your perspective over here. Till February, we had seen that the small cap index rallied by almost 70% from the March bottom, mid cap rallied by 60-65%, and the large cap rallied by 27 to 28% till February end. And there was a huge divergence between the large cap and the broader market return. And we always see that whenever this type of divergence emerge in the market, there will be a evident of style and sector rotation in the market, and which is quite visible in last 10 days of market. So we are, as we already pointed out in our topics report, that the market positioning is likely to shift towards the large cap oriented in immediate next 1 to 3 months. As we are entering into a multiple event, and there are multiple macroeconomic factor which is clearly visible in market. So the one need to keep their portfolio tilted towards large cap. There could be some amount of time correction in the broader market. During the time of mid-February, there were 84% of the NSE 500 stock were trading above their 200 days moving average. Yesterday, that number was 64%. The long-term average is 55%. So based on this chart, we can say that we are still away from the long-term trend line. So, so on immediate basis, the large cap will provide more margin of safety in terms of the valuation and in terms of the growth visibility.
Can you tell us how is your, what is the construction of your portfolio right now, and how has it changed in the last 3 months to align itself to what 2024 is likely to throw up?
So as we are saying that the market positioning is shifting towards large cap. So momentum was the most dominating theme in last 1 year on 1 month scale, 3 month scale, and 6 month scale. And the most of the momentum was driven by mid and small cap universe. So 6 months back, we were having a large amount of mid and small cap ideas in our topics recommendation. But in last 3 months, we have skewed towards the large cap ideas. So out of top 15 recommendation, right now we have 8 stocks from the large cap universe. And at this juncture, we believe that there are 2 themes will be evident in the market: growth at a reasonable price, and the quality theme will be the overarching theme over and above the momentum theme. That is clearly visible in last 1 month or 10 odd days. We believe that growth, which is available at a reasonable valuation, and quality will provide more margin of safety in the current environment for next 1 to 3 odd months.
Okay, Neeraj. So sort of to talk about the shift now from momentum to sort of looking at more quality, can you sort of translate that into sectors or specific themes that one is looking out for? Because as you're rightly saying, there's a lot of sector rotation. It's not like there's one decisive shift in which pharma is the one sector outperforming. One day it's IT, one day it's pharma. So what, according to you, should be, sort of the portfolio weights now in terms of sectors?
So in terms of sector, we are overweight on BFSI, we are overweight on automobile and telecom. So under BFSI, we continue to like ICICI Bank, and in the PSU banking space, we continue to like SBI and Bank of Baroda. Under automobile, we continue to like TVS Motor. We are seeing that the entire market positioning for the automobile is shifting toward two-wheeler space. In 2022 and 23, we had seen there was a huge amount of shift towards the SUV space. Now market is shifting toward two-wheeler, where we have seen the good amount of visibility on the new launches. Along with that, the export team is picking up. So we are very confident about the two-wheeler space. Under two-wheeler, we continue to like TVS Motor. Under telecom, we like Bharti Airtel as a theme. So telecom is a space now. We have already seen the pain in last couple of years. Now we are seeing the ARPU improvement story. So we continue to like Bharti Airtel. Under consumption, we continue to like Varun Beverages for from the consumption space that we are continuously seeing the volume uptake and company is increasing their footprints in across the India. Along with that, the channel the new product that is Sting is currently doing well, and we are entering into the summer season, and we believe that in the Q4 is likely to be better as compared to the previous quarter based on the summer season is around the corner. Under consumption, we also like QSR. At this moment, the QSR we like Westlife Food in under QSR space. We believe that right now this is a good time to accumulate these stocks, and we believe that the QSR thing likely to pick up in next 1 to 4 to odd quarters.
Getting back to the two-wheeler space, TVS Motors apart, what is your thought on what's happening in the more premium motorbike segment? Now, Eicher Motors is the big gainer today. It's been the market leader. It's been the dominant luxurious luxury bike. But now there is increasing competition coming in from Hero Harley Davidson or Bajaj Auto Triumph. Today, UBS has come out with a note saying that these competitors, though they have aggressively priced their models, they haven't managed to dent Eicher Motors Royal Enfield too much. In fact, their sales and volumes are tracking below guidance. And Eicher Motors has corrected quite a bit. Where do you stand on Bajaj, Hero and Eicher Motors, and weigh in on the valuations?
So in terms of packing order, we continue to like TVS Motor. We continue to like Bajaj Auto and Eicher Motor. But this is our packing order. But we are quite bullish on the TVS Motor as per se because they are strengthening into the EV space, and that is giving ground. And in the upcoming quarter, they are also launching good number of pipeline in upcoming quarter, and along with that, all the two-wheeler industry is the beneficiary of the export pickup. So the entire volume growth for the two-wheeler industry likely to go up in upcoming quarter, and under this, the packing order for us will be TVS Motor, Bajaj Auto, and Eicher.
Okay, that's the take on some of the frontline auto names. Just to round things up, given the kind of rally that we've already seen, let's talk about the PSU side of the market, because that's had the bulk of the gains come through. What are you advising here? I mean, book profits, get out, lighten, buy the dip. What's the call?
So one need to understand that the PSU stock, what we have seen the biggest rally in last 1 year, that is purely driven by the fundamental. Lot of fundamental for the PSU space has changed in last couple of years. The compliance has significantly improved. The asset quality for the PSU has significantly improved. On top of that, the growth has significantly improved. The government is also spending in the government capex, and a few of the PSUs under the defense, railway, they are seeing a good amount of capex, and the new avenues are opening up well based on the increasing capex from the government. What we believe that right now the entire PSU basket is sitting at 16% of the overall market cap, which was around 8% during the time of COVID drop, and overall in last 15 years it was around 23%. The structurally, we believe that there is more room available for the PSU as per se theme. But right now, market is in right now, as I already mentioned, that the market there is a style rotation in the market, and lot of stock fall under the momentum space. So we could see some amount of style rotation, which could be visible in the near term. But the long-term story for PSU will continue to be there. In our topics recommendation, also we have 3 PSUs. Two is from the PSU banking space. We continue to like SBI and Bank of Baroda, and in the mining space, we continue to like Coal India as a theme. So there could be some pressure in near term, but the long term growth story continues.
Okay, so selectively, you still like some of the larger PSUs. Got that. Thank you very much for joining in. Good to have you on our show today. Thanks for the perspective. That's a word coming in from a guest over there. Speaking of